Hello beautiful blockchain people, that's me again at CryptoSpine. This is my next cryptocurrency market overview. So let's start. Let's have a look at the prices of the major cryptocurrencies according to the site of CoinGecko. And as we see, the market has recorded additional price increase for the last 24 hours. So definitely I would say that the bullish sentiment remains in place and we have this continuation of the uptrend. And today is Sunday, that's why I will just mention some of the key news that took place earlier or events that took place earlier this week. And starting from tomorrow, we will analyze the price charts of the major cryptocurrencies, starting from Bitcoin. That's why today let's have a look at some of the key news. First, there was a lot of positive news. For example, the first one is that the Commonwealth Bank of Australia, one of the biggest commercial banks in Australia, has announced that it will become Australia's first bank to offer customers the ability to buy and sell crypto assets and so on. Later, we saw, for example, that the mayor of New York underlined that he would like to receive his three first paychecks in Bitcoin. Then we saw the mayor of Miami and the other mayors, and something similar to take place in Brazil as well. So we have a lot of positive news. But I want to focus today on one event that I think is also very significant and interesting for the cryptocurrency market. And this is namely the following event. On Wednesday, the Central Bank of the United States, or Fed, said it will begin winding down asset purchases by $15 billion this month. So this is the so-called reduction of the money printing that the Central Bank of the United States, and not only in the United States and other parts of the world as well, has been conducting recently. So we know that they're injecting a lot of liquidity into the global financial system, and that is one of the key drivers behind the prices of many financial assets, including Bitcoin and cryptocurrencies. And now we see that this process is winding down. So this is the so-called tapering or reduction of this money printing pace. And this is actually the site of the Central Bank of the United States, or the so-called Federal Reserve. And this is the decision that was published on Wednesday after their monetary policy meeting. So here is the decision. I just want to highlight a couple of sentences here. So here we see that they said that the committee decided to begin reducing the monthly pace of its net asset purchases by 10 billion for treasury securities and by 5 billion for agency mortgage-backed securities. So this is exactly how they've been injecting liquidity into the global financial system, actually in particular in the United States, by buying these assets. They, let's say, print money out of a thin air, buy these assets, and this money they get into the US financial system. The same process is taking place in Europe, for example, and in the other parts of the world as well. And now I want to say that many people started to ask how this will affect or impact the cryptocurrency market, because that was a very positive event once launched for the financial assets, actually for their prices, and now we see the opposite process. I want to say that most cryptocurrency enthusiasts, they're skeptical about this tapering process or the beginning of this tapering process. They think that the Central Bank of the United States, or Fed, they will never stop injecting money into the global financial system by printing them out of a thin air. And this is just an attempt to, let's say, reduce the pace, but it won't be unsuccessful in the long run, and they will get back to printing a lot of money again. And I want to say that I've been in the financial market since 2006. I remember the beginning of this, let's say, program that started in the late or in the last months of 2018. So 2008, sorry, that was a long time ago. In 2008, I remember that in 2015, in December, and in 2016, The Central Bank of the United States, they try to, let's say, switch off this printing machine. So they tapered once again this money printing, asset buying, and they stopped buying assets for a couple of months, but that was unsuccessful. The economy needed this easily printed money, and they reduced the so-called quantitative easing program or buying these assets. And that's why nowadays I want to say that most of the cryptocurrency enthusiasts, they don't think that they think that this process won't be successful. And let me show you some interesting statements. For example, here Jameson Loop, he's a famous cryptocurrency and actually Bitcoin enthusiast. He said that it is easier for a camel to pass through the eye of a needle than for central banks to quit printing money. He published this immediately after Fed published their decision for beginning of the, let's say, the tapering process. Adam Beck said amen to that, so we know that he's the Hashcash inventor. So people are, the cryptocurrency enthusiasts, they do think that this process won't end. The Fed will continue to print money. Next, here is the Bitcoin maximalist, Max Keiser. He said, no, you can't taper a Ponzi. The Fed will keep rates near zero until the US dollar collapses and the American economy disintegrates. The end. So he said that exactly once again after Fed published this announcement or statement or actually monetary policy decision, he published his point of view. And I want to say that one of the key, let's say, segments of the financial market that depends heavily on this easily printed money is the US stock market. So at that moment, I was following the chart of Standard & Poor's, and let me show you how it looks like. For example, this is S&P 500. And I want to say that now we will have a look at the daily chart of this broad index in the United States, and we see that on November 3rd, when the decision was published, the chart didn't drop, or the index didn't drop, and we see the continuation of this uptrend. Of course, I want to say that it's still too early to say what we will see here in the chart of Standard & Poor's in the next couple of weeks or months. So let's wait and see. But for now, it's obvious that this decision has not affected negatively the Standard & Poor's index. And once again, he's heavily dependent, I would say, on this money printing machine. Of course, once again, I want to underline that the price chart may change. Let's wait and see. But for now, we don't see anything negative. That's why I think that if nothing negative happens to Standard & Poor's, for example, that is once again heavily dependent on this money printing machine, Bitcoin and the cryptocurrency market, they won't be affected negatively as well because they are less dependent. And to be honest, I will conclude my today's video or analysis by quoting one really very interesting statement relating to this money printing by the central banks. And it is an account on Twitter that I don't like that much, actually, his or her statements, but sometimes there are statements that are nice, and one of them is that I will quote today. It says, this is Mr. Whale, a quite controversial cryptocurrency, I would say, activist. I don't think he's a big enthusiast because he has been saying recently that Bitcoin is a bubble, it will burst and so on. But anyway, the thing I like here is that he said, if Fed prints money, this is bullish for Bitcoin. If Fed tapers or does not print money or ends the process of printing money, this is bullish for Bitcoin. So whatever happens, we know that this is bullish for Bitcoin. And I want to say that, fellas, I'm pretty sure that no matter what happens with this printing machine, even if they reduce the pace or switch it off, not only in the United States, the price of Bitcoin will continue to increase because, as Michael Saylor said, Bitcoin is going to increase forever. That's it for today, fellas. Thank you for watching this video. Please share your point of view as a comment below. Of course, I wish you a very wonderful day. Good luck in the financial markets, and I hope to see you in the next one. It was me again at CryptoSpark.